We are kicking things off with a massive market concentration story. Nvidia is doing staggering heavy lifting for the entire US stock market, accounting for roughly 15.5% of the S&P 500's total return in 2025. This level of influence makes investors pause and seriously consider what happens if that momentum suddenly stops. We dive into how this single chip maker is shaping the financial landscape right now. Product and tooling announcements. Plus, we look at retail earnings from Home Depot and TJX companies to get a broader picture of macro demand. Finally, we wrap up with the broader economic picture. Dow Jones futures, S&P 500 futures, and Nasdaq futures are all in focus as President Donald Trump issues a warning about Iran, while Dow giants Nvidia and Walmart are set to report their earnings this week. Don't miss out on these critical updates. Stay with us for the full breakdown. Nvidia's dominance. How one chipmaker is reshaping the S&P 500 and crypto markets. A deep dive into recent market dynamics reveals an unprecedented level of concentration within the US stock market, largely driven by the performance of Nvidia. The company's massive influence on the S&P 500 earnings story is prompting serious questions about systemic market risk. Nvidia has become a gravitational force, accounting for approximately 15.5% of the S&P 500's total return in 2025. This single chipmaker was responsible for nearly 1/6 of the index's overall gains, which rose by 17.9% during the same period. Nvidia's share price surged nearly 40% in 2025, fueled by relentless demand for its artificial intelligence accelerators. Projected revenue for the company's fourth quarter of 2025 stands at $65.7 billion, reflecting a substantial 67% year-over-year increase. The market's dependence on Nvidia is stark. Analysis suggests that removing the company from the IT sector would drastically reduce overall earnings growth figures, pulling them down to modest double-digit territory. The scale of this influence was highlighted after Nvidia's May 23, 2024 earnings report, where the company's market capitalization jumped by $218 billion in a single trading session, a gain larger than the market capitalization of roughly 93% of S&P 500 companies. This creates a powerful feedback loop. Rising Nvidia stock weight increases passive fund flows, which pushes the price higher, further increasing its weight in the index. Conversely, downward movements trigger the reverse effect. Major technology players, including Microsoft, Amazon, Google, and Meta, are pouring tens of billions into AI infrastructure, with a significant portion of that expenditure flowing directly to Nvidia. Furthermore, this dominance extends into the cryptocurrency sphere. Digital assets tied to AI narratives, such as tokens related to decentralized computing and GPU networks, exhibit heightened sensitivity to Nvidia's performance, often surging when earnings beat expectations and selling off sharply when they miss. This dependency introduces significant fragility. If Nvidia's growth rate decelerates, say, from 67% to 30%, the impact on the broader S&P 500 earnings outlook would be substantial. Given the increasing correlation between crypto markets and tech-heavy indices during risk-off events, a downturn led by Nvidia could easily drag digital assets down. For investors, the message is clear. Exposure to broad indices means significant, often underestimated, Nvidia exposure. For those tracking AI narratives in crypto, Nvidia's quarterly earnings are now a critical macroeconomic event to monitor closely. Potential challengers, such as AMD, Intel, and custom silicon initiatives from hyperscalers, represent ongoing threats to this current market dominance. Nvidia's dominance in the technology sector is significantly reshaping market performance and risk profiles, according to recent analysis from Crypto Briefing. The company's performance in 2025 has been extraordinary, accounting for approximately 15.5% of the S&P 500's total return, which grew by 17.9% over the same period. Nvidia's share price surged nearly 40% in 2025, and projections indicate a massive revenue trajectory, with Q4 2025 revenue expected to hit $65.7 billion, marking a substantial 67% year-over-year increase. Following its May 23, 2024 earnings announcement, Nvidia's market capitalization experienced a dramatic jump of about $218 billion in a single trading session. Industry observers point to index weighting mechanics as a key factor amplifying Nvidia's influence. This concentration of returns creates a feedback loop where price gains drive passive investment inflows, magnifying the impact of a single large constituent. Furthermore, the analysis highlights a heightened correlation between Nvidia's earnings reports and movements in AI token and GPU rental markets. This cross-asset correlation presents a material risk factor for investors and practitioners managing AI-linked assets. The underlying driver of this concentration is the intense demand for AI accelerators. Hyperscalers, including Microsoft, Amazon, Google, and Meta, are deploying AI infrastructure at scale, with a significant portion of this spending directed toward Nvidia. This dynamic establishes compute sourcing risks that closely mirror the broader market dynamics for these essential accelerators. For practitioners and investors, the takeaway is clear. Nvidia's performance should be viewed not as an isolated company update, but as a systemic cross-market risk factor. Monitoring these supply and earnings signals is crucial for assessing systemic sensitivity and operational risk across compute budgets and diverse asset classes. While this concentration is notable, experts suggest it represents a shift in risk management rather than a complete paradigm change for the broader market. Nvidia, Google, and retail earnings are set to dominate market focus this week, signaling a convergence of critical signals across AI hardware, platform development, and macroeconomics. CNBC reports that Nvidia, the leading provider of AI chips, will release its first quarter earnings on Wednesday night, making the company and the demand for AI hardware a central event. Simultaneously, Google is scheduled to hold its developer conference, which is anticipated to feature significant announcements regarding new AI products and tooling. On the retail front, attention is also turning to earnings reports from Home Depot and TJX companies. LSEG estimates Project Home Depot to report $41.53 billion in revenue and $3.41 in earnings per share, with FactSet forecasting a 0.8% same-store sales growth for the first quarter. Analysts have also provided context, with Morgan Stanley describing the U.S. housing market as continuing to bounce along the bottom and commentary on Home Depot's guidance, including its 2024 SRS distribution acquisition, being cited. For industry practitioners, these events provide crucial near-term intelligence. Nvidia's results are expected to offer clear signals regarding data center GPU demand and inventory management, which directly influence cloud instance availability, spot GPU pricing, and procurement strategies. Google's developer conference is key for understanding incremental API updates, SDK enhancements, and partnerships that will shape ML ops choices for the coming quarters. Reporting frames the week as a confluence of hardware, platform, and macro signals. Retail results, tied to housing activity, offer context for broader enterprise IT spending and capital allocation decisions, which are used by observers when modeling enterprise AI budgeting and rollout timelines. Key short-term indicators to monitor include changes in GPU spot market prices following Nvidia, product announcements from Google that impact model hosting, and guidance from Home Depot that informs macro demand assumptions. While Nvidia and Google updates are vital for hardware and platform, retail earnings provide necessary macro context, though neither is expected to be a paradigm-shifting release. Market watch. Futures and geopolitical tensions drive investor focus. Investors are keenly focused on the upcoming market open, with Dow Jones, S&P 500, and Nasdaq futures set to trade Sunday evening. The market sentiment is being shaped by a confluence of economic indicators and geopolitical warnings. A significant factor influencing investor positioning is the volatile environment surrounding oil prices and treasury yields. Last week, major indexes experienced downward pressure, largely attributed to surging treasury yields and elevated oil prices following the release of the S&P data. Adding a layer of geopolitical tension to the economic calculus, President Donald Trump issued a warning to Iran, stating that the clock is ticking. This statement introduces uncertainty into global energy markets and regional stability, factors that analysts are closely monitoring. Corporate earnings reports are also scheduled to provide key insights into sector performance. Major technology and retail giants, including Nvidia, NVDA, and Walmart, WMT, are set to release their earnings reports this week, which are expected to be critical benchmarks for market direction. The overall market picture remains nuanced, balancing corporate performance against macroeconomic pressures and international developments as investors await these crucial data points.